Good afternoon. Let's do some business. We are doing it live right here, doing more at 4 weekday afternoons. We get right down to business with the News Driven Hour right after Ben Shapiro and Tom Looney's excellent news and traffic updates. And we do all this just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air right now, 790 KBC. Streaming live online worldwide at kbc.com. Also, the Mottek On Money podcast on all your favorite podcast platforms. Another one for the record books on Wall Street today. A bit more nervousness on Main Street with jobless claims moving higher this week. Stocks closing mixed today, though the S&P 500 and NASDAQ both managed a fourth straight day of record high closes. The Dow slipping again today, down 65 points. The S&P 500 managed a closing gain of 13. The NASDAQ up 59 points. Both the S&P 500 and NASDAQ finished at record highs. The latest rally in government debt sent Treasury yields to their lowest levels in more than 2 months. In reaction to the latest news on the economy, the yield on the 10-year note eased to 4.24%, rates falling for the ninth time of the past 11 trading days following the release of a softer-than-expected producer price index reading. That's the reading on inflation at the wholesale level. All this a day after the Federal Reserve guided the financial market toward the likelihood of just 1/4 point rate cut this year. But looks like the market's thinking different. Fed funds future traders, according to Market Watch, boosting the likelihood of at least 2/4 point rate cuts by December, according to the CME Fed Watch tool. That producer price index for the month of May we got today contained enough positive developments for the market to assume a slightly greater chance of a rate cut from the Federal Reserve by September. Wholesale prices falling in May for the second time in 3 months. The producer price index down 0.2%. Economists had expected a slight increase. This followed the latest reading we got on consumer prices that came out the day before, which showed the cost of consumer goods was basically unchanged in May for the first time in nearly 2 years, but the inflation rate overall is still running hotter than where the Fed wants it, above 3%. Now, the initial jobless claims we got today surging by 13,000 to 242,000, according to the Labor Department, and that's the highest level of jobless claims we've seen since last August. Well, here's a big payday for you. $57 billion right in his pocket. Tesla shareholders this afternoon approving Elon Musk's massive pay package, dealing Tesla an important, if symbolic, victory, and also giving the company the go-ahead to reincorporate in Texas from Delaware. Now, this enormous pay package vote was advisory only, and Tesla shares moving slightly higher now in after-hours trading. Tesla stock had closed up more than $5 at $182 and change. Looks like Apple hit a record high today. NVIDIA also continues on a roll following its 10-for-1 stock split, up more than $4 at $129 and change. Of course, looks like there are more EVs in our future, and we'll also possibly be seeing some flying cars in the very near future. We will talk about that with our go-to car expert, Lauren Fix, will be joining me live later this hour. A lot to talk about there. And on the geopolitical front, a U.S. Navy submarine has arrived in Guantanamo Bay, Cuba, in a show of force as a fleet of Russian warships gather for planned military exercises in the Caribbean. Getting this word now that the U.S. Southern Command said the USS Helena, a nuclear-powered fast-attack submarine, pulled into the waters near the U.S. base in Cuba today, just a day after a Russian frigate, a nuclear-powered Russian submarine, and a Russian oil tanker, as well as rescue tug, crossed into Havana Bay after drills in the Atlantic Ocean. We are, of course, watching what's happening with our fiscal situation in Washington. The threat of fiscal dominance. Will the U.S. resort to more money printing to finance the rising debt challenge? I'll discuss that with Romina Baccia, Director of Budget and Entitlement Policy at the Cato Institute, later this hour. But first, on your money, the markets, the economy, the latest readings we got today, as well as the record highs. Joining us live now, money manager Gabriel Wisdom with American Money Management and author of Wisdom on Value Investing. Gabriel Wisdom, thank you very much for taking the call. Pretty thick news day here today, a lot to unpack. Give us your reaction to the big news here and the record highs that we saw today again.
Well, Frank, this has been a very, very big week for a number of reasons, not the least of which is the Federal Reserve. The Fed chair, Jerome Powell, is under tremendous political pressure, obviously, to either raise either leave rates alone, raise them, or reduce them, depending on what side of the aisle the letters are coming from. One letter led by Senator Elizabeth Warren told Chairman Powell that you have kept interest rates too high for too long. Another letter coming from the GOP said, don't reduce rates. If you do, you bring on financial Armageddon. Obviously, it's better for the incumbent should interest rates come down and the fire stokes and the markets go higher. And it's better for the GOP, for the presidential candidate Trump, if rates stay the way or just where they are or go higher. One economist, Frank, is now saying that very likely rates will go higher, and the reason for it is that there's a history of struggles with inflation that indicates the Fed should absolutely not lower interest rates until inflation hits the 2% target. We're not even close. In fact, the conference board is saying that the average inflation rate is around 4%.
On the You're Live with Money Manager Gabriel Wisdom, let's talk about the big story that's pretty much on top of all the financial news wires this afternoon. Tesla shareholders approving Elon Musk's massive pay package, but looks like there's still going to be a legal fight over this. Actually, $56 billion pay package. Not bad. What's your reaction to that news and where Tesla might go from here?
Well, it's interesting. Tesla has a tremendous amount of key man risk, as it's known. If he leaves, then Tesla becomes less interesting. On the other hand, Elon Musk's interests are divided. Not only does he have Twitter and SpaceX and the neural chip thing and the Boring Company, but he's running Tesla more or less. Now, in 2022, Musk had lost so much money that the Guinness World Records had recognized him for the largest loss of a personal fortune in history. Back then, Tesla shares had slumped pretty hard, but they're down some 21% year to date. Generally, you reward a CEO when the price of the stock has been doing well. So there's going to be a lot of resistance here, and we'll see what happens.
Interestingly, Kathy Wood with ARK Invest, who once generously told me she used to listen to this show when she lived here in Southern California, so we like her for that reason. But, of course, now she gets a lot of attention for having a big stake in Tesla. Big Tesla fan. Shares of Tesla surging after Kathy Wood, ARK Invest, said she thinks that the stock should rocket more than 15-fold in 5 years as the EV maker evolves into a more profitable robo-taxi company. According to an ARK Invest report, ARK's updated open-source Tesla model yields an expected value of $2,600 per share in 2029. We did see Tesla stock move up today during regular hours of more than $5 to $182 and change, only slightly higher on this shareholder approval of Elon Musk's pay package. But what do you think of that prediction on where Tesla goes from here?
Well, nobody can predict the future. We know that. And Kathy Wood has had some great calls. She was early on Tesla, but she was very, very late on some of the other new technologies. And the ARK Fund, as you know, has been among the worst performing funds over the past 2 years, though it had a really great run. And she's a brilliant woman. I mean, this lady is, you can't outsmart her. So over the long run, I'd have to say I'll pay attention.
All right, and we got Apple at another record high here today. Apple's been on a roll lately since that Worldwide Developers Conference. It actually took a hit the day of the conference, but then has rebounded to hit record highs now at 214 and change. What do you think about Apple here?
Well, that Apple is going to start to introduce its own version of artificial intelligence, much like what Microsoft has done with Recall, I think it's called. Google has the AI overview in search. There have been some problems there. So far, Apple Intelligence is not yet operational. I think the biggest challenge for Apple, and I've liked Apple, and I liked it when it was down earlier this year, but the biggest challenge is that those iPhones last a very long time. I saw one report that said that 61% of iPhone users had their previous iPhones for 2 or more years. Some 23 or 29% hold on to them for better than 3 years. So with the advent of Apple Intelligence, we might see an increase in the replacement cycle, which would benefit Apple. And the stock still looks reasonably priced to me.
All right, this is our first conversation since NVIDIA had that 10-for-1 stock split, and it's been moving higher this week, more than $4 today at $129 and change. On a split-adjusted basis, it would be at a record high here today, right? What do you think of NVIDIA?
Well, I gotta love it. Everybody loves a winner. There's no question that NVIDIA is not the only game in town. There's Advanced Micro Devices, there's Intel. There are a number of companies that are making next-generation chips. The price competition is coming for NVIDIA. It's not there yet. Meantime, Microsoft, Apple, Meta, Amazon, they're all using NVIDIA, and that benefits them. Plus, the stock split is very, very bullish. There was a Bank of America study that showed the average 12-month return for any stock after a split was some 25%, more than double the average annual return of the overall market in any given time. So I think they were smart to split the shares, makes it more accessible.
All right, turning to the blue chips, and that is those are the names in the Dow Jones Industrial Average, the Dow 30. It should be noted the Dow's been moving lower lately, while the Nasdaq's been moving up, and the S&P 500's been hitting record highs. So don't often see that. As a matter of fact, according to one analyst who keeps track of all this, let's see, it's a phenomenon seen 20 times in the year 2000, the year that marked the bursting of the tech bubble. Are we in for another tech bubble here? And what do you make of the Dow lagging behind the other major averages here?
Frank, the Dow is only 30 companies. That represents a very small slice of corporate America. And if you look at the kinds of companies that are in pension plans or in your 401k account, the performance of your 401k, it doesn't have much correlation with the Dow Jones averages. The Dow reflects none of the movements of the big marquee names like Alphabet, Meta, NVIDIA, et cetera. But over the long run, the S&P 500 and the Dow have run somewhat in lockstep. It's just that the Dow 30 are older companies. Many of them are deeper value because they're not so exciting anymore.
All right, turning to crypto, looks like once again a big subject there in Washington. We see Bitcoin lagging, it seems, the NASDAQ, since it's been noted on this program that Bitcoin and cryptos in general seem to have a correlation to the NASDAQ, but Bitcoin off its all-time high at just shy of 67,000 here now. I know you're not a big laser eyes on guy, but you do cover and watch what's happening with cryptos. What are your thoughts on what's happening with Bitcoin and the others here?
Bitcoin is clearly the leader in cryptocurrencies. There's no question about it. But one thing that the Bitcoin and the other so-called cryptocurrencies don't really have is they don't have stability. And that's the hallmark of a currency. It has to be stable in value if it's going to be used to conduct transactions of various kinds. At the same time, the U.S. dollar has been pretty strong, and the strength of the dollar, which if the trend is your friend, you got to bet on the dollar here. It's likely to continue into 2025. The reason is our interest rates are higher than other major industrial nations around the world, and there are growth differentials between the U.S. and the other G7 economies that are being recognized by those who believe the dollar is a storehouse of value, at least in the short run. In the long run, where does Bitcoin go? Gosh, I saw one valuation that says it could reach $1 million per so-called coin within the next couple of years. Nobody really knows Clearly, the SEC's approval of a spot Bitcoin exchange-traded fund has attracted a new wave of retail investors.
Right, and the Bitcoin miners also in focus. Some of those are trading. Former President Trump says all Bitcoin mining should be in the United States in his latest embrace of cryptos, according to Forbes magazine. And at this point, Gabriel Wisdom, let me ask you the big question here. Where are you putting money now and or taking it off the table?
You know, you make an interesting point, Frank, about Bitcoin, cryptos, and all the energy that is required to keep these things running. The artificial intelligence situation, AI is likely to boost productivity. I saw one report from Goldman Sachs that said that at the job market, AI has probably boosted labor demand instead of getting rid of jobs, because now it's created opportunities in the AI adjacent sectors or occupations. I like this whole artificial intelligence and chips space. Additionally, I think that the future is going to be more and more electric. And so the U.S. grid build out that's necessary to build tens of thousands of miles of new transmission lines, going to cost several $1 trillion by 2050. I want to be in those companies as well. One would be the old GE, which is now GE Renewable Energy.
Gabriel Wisdom, Managing Director at American Money Management, based here in Southern California, also author of Wisdom on Value Investing. Gabriel, it's always great to have you with us. Thank you very much for taking the call this afternoon.
Thank you, Frank.
Let's get right out to the freeways now on 790 KABC. Folks, let's be honest. Sometimes we find ourselves or a loved one dealing with a massive injury caused by a terrible accident by no fault of our own. Sometimes it's simply being in the wrong place at the wrong time. We're good at preparing for earthquakes and fires, but let's not forget to prepare in case we're involved in a major accident. It's critical to know who to call first. Clark Fielding became a lawyer to help you in a crisis. Fielding Law is focused on justice and resources for you because they understand how the system works and what to do in the most horrific situations. I always say to put the Fielding Law team in your phone under the word accident. So all you have to do is hit the number that you're going to put in your phone right now. That number is 833-88-SHARK. 833-88-SHARK. You'll feel better having set this up for yourself and your family. With the population exploding and increased vehicles on the freeways, be proactive. Prepare for the worst. Expect the best. But if and when you do need help, call Clark Fielding and his team of sharks at 833-88-SHARK. That's 833-88-SHARK. Or go to clarkthesharklaw.com. Again, that's clarkthesharklaw.com. 790 KBC welcomes ZZ Top coming to the Bank of America Performing Arts Center October 29th. Tickets on sale tomorrow, Friday, at Ticketmaster.com. Right now, caller 9 wins at 1-888-795-2222. You can get a pair of tickets to the show if you're caller 9. Those tickets furnished by Nederlander Concerts. Call right now. Caller 9 wins 1-888-795-2222. Well, this tech rally's got legs on Wall Street. The Nasdaq had a record high of 59 points, settled at 17,668. The S&P 500 also continuing its record-shattering winning streak of 13 to 5,434. But the Dow slipping 65 at 38,647. Remember, it hit that record high last month, about 40K. The yield in the 10-year note has slipped to 4.25%. Bitcoin up more than 300 now at 66,928. Ethereum up 6 at 3,481. Doge at 14 cents. Gold slipping nearly $18 at $2,303.21 an ounce. Silver down 6 cents at $29 an ounce. GameStop shares moving higher today, up nearly $4 to $29.12 at the close. Nvidia continuing on a roll. The Magnificent One up more than $4, $441 to be precise, at $129.61. And Apple at a record high close of $1.17 at $214.24. Tesla moving up more than $5 today during regular hours at $182 and change, moving slightly higher in after-hours trading on news that Tesla shareholders have approved Elon Musk's $56 billion pay package. And now the latest news for you here on 790 KABC. Mottek On Money continues here in 790 KABC. Uncle Sam's credit card bill getting bigger. Have you heard this news? The budget deficit reaching $1.202 trillion, with the federal government now two-thirds through its current fiscal year, driven in part by rising interest payments on the national debt. The deficit totaling $347 billion in the month of May. That's an increase of 44% from the gap in the same month a year earlier, according to the Treasury Department. When adjusting for the acceleration of certain benefit payments into the month of May because June 1st fell on a non-business day, the increase was just 5%, according to the Treasury. The federal government's fiscal year runs from October to September, by the way. High deficits and elevated interest rates have caused net interest payments by the government to surge in recent years. Big subject of discussion in Washington. Will the U.S. resort to more money printing now to finance the rising debt challenge? Let's bring in Romina Baccia now, Director of Budget and Entitlement Policy at the Cato Institute, who's taken a good look at this in her latest article. Romina, thanks very much for coming to the line this afternoon.
Thanks so much for having me.
We'll take it from the top and give us your reaction to this latest news on the deficit and what's going to happen here.
Yeah, you see, it looks like we're going to be close to $2 trillion by the end of this year because it's important for people to recognize we're in June, and while there's only 3 months left in this fiscal year, federal government agencies tend to spend most of their money in September. And the reason for that is that a lot of the appropriations, the spending that they received from Congress earlier in the year, they will lose if they don't use it. And so you see always huge spending sprees with agencies spending 25% of their budget, sometimes more, just in the month of September to avoid those funds from being lost. And I think this is something that's particularly discouraging and troubling for taxpayers, is that when you have such a high deficit and you have a country that continues to be plagued by inflation because of too much spending and too much government borrowing, and then to know that federal government agencies are going out and just buying iPads like they're going out of style in order to avoid losing that money, that can be quite frustrating. But in defense of government agencies, there is a law actually that sort of forces them to spend every single penny. The 1974 Budget Control and Impoundment Act. That's actually a law that President Trump is taking a close look at. He would like for Congress to give him impoundment authority, so the president could withhold spending that Congress has authorized that is simply unnecessary. So that might be something that we should take a closer look at, especially given these high deficits.
Very interesting. And, of course, we have seen the new inflation readings this week, still running hotter than where the Fed wants it, certainly. And now big discussions following the Fed meeting this week and the Fed chairman's news conference as to the next move from the Federal Reserve on interest rates and so forth, which I just mentioned also contribute to the deficit increase. What about your read on inflation and where and the Fed's next move and where this goes from here, or are we just spiraling out of control?
Well, even the President Biden has acknowledged that inflation is still too high. The American people are feeling it, and I think this is the kind of heat that the administration is feeling as they're running for re-election. One of the worst things that can happen to a sitting administration is for an economy that isn't working out for people, and inflation is certainly something that we're seeing that the public really, really hates. That is actually a good thing, because with the high spending, especially on old age benefit programs, Medicare and Social Security are growing at a rapid pace, as are interest on the debt, which will come in at almost $900 billion by the end of this fiscal year. To put that in comparison, we will be spending more on interest on the debt this year than we will spend on all of national defense, and then we will spend on all of Medicare. So those are two major budget items, Medicare and defense, and interest will actually be bigger than either one of those. And so those are the key drivers of our debt: interest, Medicare, Social Security. And there's a real risk if Congress doesn't reform Medicare and Social Security, because they can't do much about interest other than, not spend as much, so the debt gets smaller. That's otherwise pretty much baked in. But they can reform Medicare and Social Security. They can slow the growth in spending on these programs to avoid benefit cuts, especially for beneficiaries who actually need those benefits, your poorer, more vulnerable seniors. But if they refuse to do that for political reasons, then it's not out of the question that the deficit will get so high and so onerous and interest costs are going to get so big that the federal government may be looking to the Federal Reserve, to our central bank, to help finance some of its spending. We saw this during the pandemic, where the Federal Reserve printed an additional $5 trillion in money. And that, as it worked its way through the economy, created a lot of this inflation, the 20% increase in prices that we've seen since the Biden administration took office. So this money printing comes at a very high price to the American people, and politicians are catching on that maybe this is not going to be as easy a solution as they thought. And then what's left is, a fiscal crisis. If you don't want to print money, you have to reform the spending, and I think that that's where we need to go. And a fiscal commission would really help in this respect to overcome some of the political hurdles to reform.
What about the dollar's role as the world reserve currency? This week, the Saudi Arabians exited this deal that they'll no longer be buying oil in dollars. This was a petrodollar deal that lapsed after 80 years. So been hearing a lot about how the dollar is falling out of favor as the world reserve currency. What about these latest developments?
Yes, that is true. There are many countries, especially countries like China and Russia, that are trying to get out of trading in U.S. dollars and not holding so many dollars, especially China, as part of their reserves. In part because the United States dollar gives the federal government tremendous geopolitical power, and they do use it. And so we still are the primary reserve currency, but it's certainly not a status that we should take for granted. In addition to, being the world's reserve currency, being particularly helpful for national defense purposes and geopolitical reasons, it's also something that benefits the American people economically. It makes it cheaper for us to import goods from abroad. Now, some people say that might be a bad thing. They would like for more things to be produced in the United States. This is something that President Trump has emphasized. He's actually called for a weaker dollar. But I think overall we benefit from a strong dollar, and that is very much at risk if the federal government continues to be reckless with the federal budget, because the strong dollar also depends on the willingness of foreign countries, investors, wanting to hold dollars, wanting to buy dollars, wanting to use dollars in trading relationships. And when the dollar becomes unreliable because of inflation, especially hyperinflation, which could be a potential a long-term risk over the next, say, 10 to 15 years, according to certain budget models, like the Penn-Wharton model, then that would be a huge loss to the United States. You can think back to World War II. Before World War II, it was the UK that the U.S. pound sterling was the primary world reserve currency. No more. The dollar took over. Who's going to take over for the United States, and what is that going to mean for our freedoms and our economic prosperity and the global standing of our country? Those are important questions that lawmakers should be asking. Paul Ryan recently said he expects that there's quite a high likelihood the next president could have a fiscal crisis on his hands. So better to get ahead of that before that happens, so we can make more sensible decisions about reforming spending programs, avoiding massive tax increases that would hurt our economy, rather than wait for a crisis where it's really difficult to make good decisions because you have to act quickly and see where you can get money quickly, rather than phasing in reforms gradually so people can adjust.
Excellent analysis, and thanks for laying it out. And that could also explain while we're seeing the price of gold hit record highs recently, above $2,400. It is about $100 below that recent record high, but that could explain what's happening with the price of gold, which is, of course, considered an inflation hedge. And curiously, it's been moving up just at a time we've been hearing inflation supposedly coming down. So you've given us a lot to think about, Romina. We'll be looking for your latest article online. The title of the article is "The Threat of Fiscal Dominance. Will the U.S. Resort to More Money Printing to Finance the Rising Debt Challenge?" Romina Baccia, Director of Budget and Entitlement Policy at the Cato Institute, who keeps us well informed on these issues. Thank you very much, Romina, for joining us live here this afternoon.
Thanks so much.
Right out to the freeways now we go on 790 KABC. Mottek On Money continues here, 790 KBC. Getting back to one of our top stories, big payday for Elon Musk. Tesla shareholders approving Elon Musk's massive pay package. When I say massive, it's massive, $56 billion. Now, this is an advisory vote. Looks like there will be some more legal challenges to this. Elon Musk taking the stage at the shareholder meeting following the results after they were read and approved amid cheers and chants of Elon from the shareholders. And he said, "I just want to start off by saying, hot damn, I love you guys." Musk said, "We are not just opening a new chapter for Tesla, we are starting a new book." Musk doubling down on autonomous vehicle goals, calling them mind-blowing and something large shareholders don't quite understand. Tesla stock moving slightly higher in after-hours trading. It had moved up more than $5 today at 182 and change, on a day in which we saw both the NASDAQ and the S&P 500 hitting record highs. Musk said on X that both his compensation package and the reincorporation in Texas proposals were passing by a wide margin. Shareholders also approved the re-election of James Murdoch and Kimball Musk, Elon Musk's brother, to the board. That's the guy that wears the hats all the time. More EVs in the future, and so are flying cars. Another report out today. Let's get an update on all things cars from our go-to car expert now, Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Lauren, great to have you with us on this big news this afternoon. First, your reaction to the Tesla news breaking this afternoon.
Well, honestly, I thought that it would pass. The reason is, you have to remember that if he walks away from Tesla, if Elon Musk says, I'm done, you didn't give me my pay package, which is substantial, let's be honest. And he is the name on the company. He is what it's all about. He has built quite a bit, and he's working on this AI, which is leading to robo-taxis. We'll see if that actually comes to fruition, because much like flying cars, it's great in concept, but maybe not in practicality. He could walk from the company, and if he did, who are they going to find that's going to be polarizing enough to get the attention and create new products, whether you like them or not? I wouldn't own a Tesla personally, but I mean, there's a lot of other great electric cars if that's what you want. But I think what he has done and created the largest segment of, which is being electric cars, he owns 60% of that market share. And so he's not going anywhere, nor is the fact that he's developing new products. So I had no doubt that he would get that money. Actually, he's got some legal challenges he'll be having to deal with this gigantic package. But in the meantime, it's good that the stockholders are supporting him.
Not just 5,600, 56,000, 56 million, 56 billion. A lot riding on that decision. So it's mind-blowing. It really is mind-blowing. So let me ask you this. This is coming at a time when Tesla and the other EV companies have been struggling, some stalling and some falling out altogether. And I don't know if you saw this report this week from McKinsey. It says almost 40% of U.S. EV buyers want to go back to combustion engine cars. So what's your reaction to that news and your outlook for where EV sales and consumer demand go from here?
Well, I've covered this on my Car Coach Reports channel, and one of the things I think is important to note that I believe the number is much higher than 40%. I guess it depends who you speak with. From what we're hearing from car manufacturers, it's closer to 60% of people that purchase electric cars don't go back to them. There are some people who are on their second and third electric vehicle, but they're realizing that the infrastructure is a problem, the cost of the vehicle is higher, the insurance is higher, the inconvenience of standing in line while it's charging. Time is money for everybody, and people are now looking at hybrids. They're looking at plug-in hybrids as alternatives, and you're now seeing a lot of manufacturers already shifting that, although I've been saying this for 20 years, and I've taken a lot of heat for it. I hate to say this, but I told you so. I mean, if you want an electric car, you should be able to buy one. It should definitely be the case, but you should also have options and not being forced to buy something that the government wants, whether it's the state of California or the federal government. And I know that they're saying that, they're going to be all electric by 2030, and that's what your current governor says, but he's not going to be in office in 2030. And whoever is in office might easily come in on day one and say, you know what, get whatever you want. And I think you're going to see that. The only company that has not gone the hybrid route is General Motors. Right now, they are saying they're going to coexist. We're going to offer gasoline models, and we're going to offer electric vehicles, and you choose what works best for you. And everyone's got a different mindset. There are still 3 car companies that have not decided to get off the electric bandwagon. That's Jaguar and Volvo and Land Rover. Although I have a gut feeling, since everybody else has already changed their mind, I'm sure it's in discussions.
On there live with Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. We're seeing these images of the flooding there in South Florida. This has got to be a factor, too, when you're standing there with an electric cord trying to plug in a Tesla or whatever, and some of these vehicles have been flooded. What about these conditions, having an electric vehicle when you're in that kind of an environment where you're standing in water looking to plug in an electric car?
I would say that's a huge mistake. The worst thing you want to be doing is standing in water. Most likely those electric charging stations are not working. If electricity and water is major no-no, I think we all learned that in like first grade in science, that it's a good way to get zapped. But we did find, I was in Naples, Florida during the flooding and hurricane that went through. They found that any electric car that got any sort of water that reached the sill, like where you enter your vehicle, that would be called the sill. Any water that got to that point, that vehicle was junk, and those vehicles were told by anybody, no matter what manufacturer, to park that vehicle outside away from a home because they could catch fire because of salt water. And so that's a big thing. Salt water and electricity are major, even worse, the amplification of a potential fire. So if you had a regular vehicle, sure, you'd have a problem if you get water that wrecked a processor or computer, but you're probably more likely to get through deep water. If the water is even a foot deep, I would absolutely stay away from it no matter what you have. There are very few vehicles that are designed to go into deeper water, and 99% of them on the road, I would say, are not a wise choice. If you have an electric vehicle, flooding's coming in your area, you need to find a parking garage or a high location to get the vehicle away from that, because you don't want to find yourself catching fire. But beyond that, charging in flooded water is a huge mistake.
Absolutely, Lauren. Well, thanks for taking the call today and all of this. So we do appreciate it and look forward to speaking to you again soon. That is our car expert, Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Live with us here on Mottek On Money on 790 KABC, and what turned out to be another record-shattering day for tech stocks. NASDAQ up 59 points to a record-high close. S&P 500 up 13 to a new record high. The Dow, though, slipping 65. Stay tuned now for the 790 KABC News Blitz with Randy Wang. I'll be back with more at 4 tomorrow afternoon right here on Mottek On Money, 790 KABC.
The Ed Milet Show showcases the greatest peak performers sharing their journey, knowledge, and thought leadership.
The quality of your life is really comprised of the quality of the questions you ask yourself, because the quality of the questions creates the quality of your thoughts. And so if you can begin to ask better questions in life, you can have a better life. The reason you're not growing if you're not is because you're not looking to ask a better question. And when you begin to ask the right questions, I believe you begin to get the right answers.
The Ed Milet Show is available on YouTube or wherever you listen.